We're looking at Bigbear.ai Holdings Inc., ticker symbol BBAI, trading live right now at exactly $6.18. The stock is currently up 77 cents on the session, representing a massive 14.25% intraday surge as we speak. This green candle you're seeing on the chart is not just a standard volatility spike. It is a decisive breakout above the psychological resistance levels that have held this asset down for the better part of the last 2 quarters. If you have been tracking the order flow this morning, you would have noticed that the buying pressure initiated the moment the opening bell rang, creating a liquidity vacuum that forced the price aggressively upward without any significant retracement. We are seeing sustained volume that suggests this is not merely retail traders chasing a momentum play, but rather a structural shift in how the market is valuing this company following the sequence of news release over the last 96 hours. Most investors logged into their brokerage accounts this morning expecting Bigbear.ai to cool off. The expectation across social sentiment boards and analyst notes was that the recent run-up leading into late November was overextended and due for a pullback. The consensus belief was that the hype surrounding the Ask Sage acquisition announcement earlier this month had already been fully priced in and that traders would sell the news today. That was the expectation. The reality, however, is significantly more complex and far more bullish for those holding long positions. The market is waking up to the realization that the valuation multiples for Bigbear.ai are being reset not just on future promises, but on the tangible integration of government-grade generative AI contracts that are hitting the books faster than anticipated. We are not seeing a sell the news event. We are witnessing a repricing of risk event, where the short side is being caught offside in a dangerous way. Let's unpack the immediate price action before we look at the fundamentals. The stock opened at $5.54, already gapping up slightly, but the real story is the relentless bid that kicked in at the 10 a.m. mark. You can see on the intraday chart how the price action climbed stepwise, utilizing previous resistance at $5.80 as new support. This tells us that there is a large buyer, likely institutional, accumulating shares and supporting the price every time it attempts to dip. This behavior usually indicates that a fund or a major entity is building a position and is willing to absorb the ask to get filled. Retail traders typically panic buy in spikes. Institutions buy in waves. What we are seeing today is a wave. Now, command the algorithm and let me know where you stand. Comment below with your average entry price on BBAI and whether you are holding for the 226 breakout or taking profits on this pop. I want to see how many long-term holders are actually in the room versus swing traders just catching this wave. To understand why this 14% move is happening today, Monday, November 24, 2025, we have to look at the broader context of what Bigbear.ai has executed in the last few weeks. The company recently announced definitive agreements that fundamentally alter its revenue profile. The acquisition of Ask Sage, a platform specifically designed for secure, government-compliant generative AI, is the catalyst that is finally being digested by the wider market. For a long time, the criticism of BBAI was that it was a consulting firm masquerading as a software company with lumpy, unpredictable revenue tied to slow-moving army contracts. The integration of Ask Sage changes that narrative by introducing a clearer path to annual recurring revenue, or ARR, which is the holy grail for software valuation. The market is waking up to the realization that the $25 million in projected ARR from Ask Sage for 2025 is likely conservative, especially given the new Memorandum of Understanding to develop an AI-driven aerospace hub in Malaysia. That specific piece of news, which broke late last week, is what is fueling the second leg of this rally. Investors are connecting the dots. Bigbear is no longer just a U.S. defense contractor. It is exporting its decision dominance framework to international markets, starting with Southeast Asia. However, we cannot talk about this price action without addressing the massive elephant in the room, the short interest. This is a critical section, so pay close attention. As of the most recent reporting data available to us, Bigbear.ai has a short interest floating around 79 million shares. Let that number sink in. 79 million shares are sold short. This represents nearly 18 to 20% of the float, depending on how you calculate the restricted shares. When a stock with that level of bearish positioning rips up 14% in a single session, you are seeing the early mechanics of a short squeeze. The borrow fee rates have been fluctuating, generally sitting low around 1%, which usually encourages short sellers to hold their positions because it's cheap to bet against the stock. However, the days to cover ratio is the trap. While the ratio might look low due to today's explosive volume, the sheer number of shares that need to be bought back to close those positions is staggering. If BBAI closes above 620 today, it puts a significant portion of those 79 million shares underwater. We are seeing signs of fail-to-deliver data piling up from late October and early November, indicating that market makers and short hedge funds were already struggling to locate shares to settle trades before this rally started. When you see the stock bid up like this on no specific new headline today, it often means a large short position is capitulating and covering their exposure. If you are an active trader, here's what you need to look for to confirm if this is a squeeze or just buying pressure. Watch the options chain for the December monthly expirations. If we see a spike in call buying at the $7 and $8 strikes, it will force market makers to hedge by buying the underlying stock, a phenomenon known as gamma squeeze. This creates a feedback loop that can send the stock vertical. Conversely, if you see the borrow fee spike overnight from 1% to 10% or higher, it means the supply of lendable shares is drying up and the shorts are running out of ammunition. You can find this data on platforms like Fintel or Ortex, and I highly recommend you check the short shares availability every morning before the market opens. If that number hits 0, volatility is guaranteed. But let's step back from the technicals and look at the company itself, because a short squeeze is temporary, but the business is what determines if the stock goes to $10 or back to $2. Bigbear.ai creates decision intelligence solutions. In plain English, they take massive, messy data sets, logistics for the U.S. Army, supply chain data for commercial shipping, or intelligence feeds for the NSA, and use AI to simulate outcomes. They don't just tell you what happened, they simulate complex what-if scenarios to tell you what will happen if you make a certain decision. This is what they call decision dominance. Historically, the company struggled because these contracts were large but sporadic. They would win a big award, the stock would pop, and then they would burn cash for 3 quarters waiting for the government to pay up. That is the expectation that bears have been betting on, that Bigbear is a cash-burning machine that will eventually dilute shareholders into oblivion. Here is the reality that is challenging that bearish thesis today. The third quarter financial results for 2025 showed a pivotal shift. While top-line revenue dipped due to the cyclical nature of those Army programs, the company posted a positive net income of $2.5 million. Now, we have to be honest, this profit was largely driven by non-cash changes in the fair value of derivatives and warrants. It wasn't purely operational profit. But for a growth stock in this sector, showing a GAAP profit on the bottom line, regardless of the accounting mechanics, changes the screening criteria for institutional algorithms. It signals that the company is managing its balance sheet effectively. When you combine that with the Ask Sage acquisition, you have a company that is transitioning from a lumpy government contractor to recurring revenue SaaS platform. That transition usually commands a much higher multiple from Wall Street. Retail sentiment on platforms like X, formerly Twitter, and Reddit are currently in a state of cautious euphoria. For the past year, the dedicated BBAI community has been battling a persistent narrative that the company was a dilution trap. Today's move is validating the bulls who argued that the GSA Oasis Plus contract award was a game changer. The GSA Oasis Plus is a massive government-wide vehicle that allows federal agencies to order services from BBAI without going through a lengthy bidding process every single time. It basically gives BBAI a pre-approved badge for unlimited task orders. The retail crowd is correctly identifying that this reduces the friction for new revenue. However, you will also see skeptics in the forums pointing out the high price-to-sales ratio, which stands around 16 times sales. That is a valid concern, and it's why we see such high short interest. The battle right now is between value investors who look at the current sales and growth investors who are looking at the 2026 pipeline. Let's discuss the risks because responsible analysis requires it. The primary risk for Bigbear.ai remains execution. They have signed the MOUs, they have won the IDIQ contracts, and they have acquired the tech. Now they have to deploy it. Government adoption of AI is notoriously slow. Even with the Ask Sage platform, if the Department of Defense delays implementation due to security reviews or budget fights in Congress, that projected revenue pushes to the right and the stock will get punished. Additionally, the convertible notes and warrants on their balance sheet act as a ceiling. If the stock price rises too high too fast, warrant holders might exercise their right to sell, flooding the market with new supply. This is a technical headwind that often caps rallies in the $7 to $8 range. So, where do we go from here? The future outlook for 2026 hinges on the land and expand strategy. The acquisition of Ask Sage was the land move, getting a foothold with a product that users love and use daily. The expand move is cross-selling Bigbear's heavy-duty simulation engines to those